Actually getting some breaking news right now. Bed Bath & Beyond shares, which have resumed trading, down about 21%, now confirming that it has received a default notice from JPMorgan. This, of course, has been the big issue ever since it made that going concern announcement back in early January, not just whether it would file for bankruptcy, but how creditors themselves would react. Bed Bath & Beyond now saying that the creditors are demanding immediate repayment on a loan. It's not quite clear exactly what loan we're talking about, but they do single out JPMorgan. Bed Bath & Beyond shares, guys, now down 24%.
Yeah, pretty remarkable to see this.
I'm still looking through this Bed Bath & Beyond statement. This is an important story here. And just looking through it, they do talk about revolving commitments that were led by JPMorgan. Based on them, it looks like the original commitments were for about $1 billion. It's not quite clear, just looking at glancing through the filing, exactly what they still owe. But again, Bed Bath & Beyond making it clear here that they have received a default notice from JPMorgan with regards to some degree of revolving credit and immediate payment being demanded by those creditors.
Yeah, and to be fair, I mean, first of all, the short position on this one was pretty substantial. 46% of the float was shorted. It's been a story we've been talking about for some time. It's one of those, you know, go back a couple of years, we've been talking about kind of the bloated retail sector. And in some cases, you know, Katie, there are just certain retailers that maybe are not necessary or the strategy hasn't been working. And this is something that Bed Bath & Beyond, I feel like, for some time has been trying to figure out.
Yeah, and those obvious problems were still there even when the stock was going crazy earlier this month. Remember when it was surging, what, double digits in a day, 60, 70%, obviously some reality hitting.
There's a lot of questions here about what other types of Bed Bath & Beyonds are out there. We know that there were a lot of idiosyncratic issues, Carol, with this company, but there is a broader issue here about companies that are in these credit agreements. They either need to refinance or they have certain terms in which the lenders can sort of get those clawbacks. And is this sort of the environment we're in right now where we're going to start to see more and more about that? The easy money era is over. We know that. The question is who survives that era.
Perhaps it's also about companies that operate in similar spaces. You know, retailers that once had a very large footprint and the business has changed significantly. Remember back a couple weeks ago, Romaine, the news that, you know, Party City was having troubles of its own.
Yeah, quite a few companies I think have been flagged. I know the folks here at Bloomberg track a lot of the potential companies. We should point out these companies, or at least not Bed Bath & Beyond, aren't in the bankruptcy process yet. But we do know there is a lot of stress there. And if we get to a stage where they can't roll over this debt, then that's basically the killer. And how much did we talk about zombie companies over the last few years? Because with zero rates, you could cut. It didn't matter how strong your business was. If you can continue to refinance it, whether it was through the banks or through the public market, you could keep going.
Pema Parmar just yesterday having a story about startups specifically. It was so easy to get money over the, you know, before everything started to change in terms of rates going up and the market tightening. It's a very different environment when the tide goes out. You get to see what doesn't make sense anymore, and investors become much more pickier.